Russia's invasion of Ukraine and the resulting sanctions and bans on Russian oil imports by Western countries has led oil prices to skyrocket to levels not seen in 8 years. And this came at a time when US inflation was hitting a 4-decade high. Oil stocks, which were already coming off of a year of market-leading returns, benefited nicely. But now, oil prices are back down to under $100 a barrel, and oil stocks have been some of the worst performing in the past week. So you might be wondering, did I miss the run on oil? There's very little sign that the crisis in Ukraine is going to come to an end anytime soon, as President Vladimir Putin refuses to engage in any sort of negotiation. Hi, I'm Mackenzie, and welcome back to our channel, where we give you the inside scoop on how the latest current events are impacting the world markets and your portfolio. In this video, I'll go through 5 different sectors in which Russia plays a major role in production and trade. Share prices for stocks within these sectors may very well jump just like oil did within the next coming weeks and months. We'll give you the background for each of these industries, as well as some stocks within each industry, so that you can make a move before prices potentially jump. But before we get into the nitty-gritty, as always, please remember that I am not a financial advisor, and I encourage you to do your own homework and due diligence before you make any trade. So, let's get started. Russia is not the largest target market for electric vehicles by any means. In fact, the country only had 13,000 registered EVs in 2021. In contrast, the US registered 700,000 EVs in 2021, and China registered 3.4 million. But still, this white-hot sector is likely to benefit from the rising oil and gas prices that are unfortunately looking like they're going to stick around. More and more people have been turning to EVs in recent years because of more affordable options available. Moreover, a 2020 Consumer Reports study shows that maintenance and repairs costs are significantly lower for EV owners. If consumers believe that oil and gas prices are going to remain high, it might accelerate this transition. And this should provide some tailwinds for EV stocks. Tesla still dominates the EV market. Despite the stock's recent pullback, it retains strong long-term potential. This is especially true as the company ramps up production across its global plants and continues to drive down costs for consumers. You should also consider how legacy automakers stand to benefit from the booming EV market. General Motors and Ford are continuing to invest billions of dollars over the next few years to build out their own EVs and capture a share of the growing market. Although riskier, you may want to check out EV startups like Rivian or Fisker. They could see the most gains if these companies take off, but that's a big if. If you buy shares now, you could see returns of 100% or more if these stocks reach their projected targets. Aside from oil, the prices of agricultural products continue to rise as a result of the tension between Russia and Ukraine and anticipated supply shortages. Besides being used for heat and fuel, oil is also used as fertilizer for grains and produce. In simple economic terms, the price of oil going up makes it more expensive for farmers to continue to produce food. This, paired with supply chain issues around the world, has made grocery prices go up and potentially some share prices too. For instance, Russia is the world's largest wheat producer. Together with Ukraine, the two countries exported more than a quarter of the world's wheat in 2019, according to the Observatory of Economic Complexity. With the supply of wheat threatened, prices soared to over $13 a bushel last week, which is the highest price recorded ever. If you're looking to gain exposure to soaring grain prices, consider investing in the Teucrium Wheat Fund, or WHEAT, the world's largest wheat ETF. The price leapt by 39% since February 24th, which is the day that Russia invaded Ukraine. You may also want to look at fertilizer stocks, another commodity for which Russia is the largest exporter of. Stocks of companies that manufacture and distribute fertilizer have seen their share prices soar in the past weeks. One of these is Nutrien, the world's largest fertilizer producer, which saw its share price rise as much as 32% in the weeks following Russia's invasion of Ukraine. Recently, Russia announced export bans on over 200 products until the end of 2022. This includes wheat, fertilizer, and other agricultural products, so you can expect stocks in these sectors to remain volatile for the next little while. Russia's export ban also applies to timber, of which it is also one of the world's largest exporters. According to forestry industry consultants Margulies Groom, Russia exported 15 million cubic meters of logs in 2020, accounting for almost 12% of globally traded roundwood. To put this into perspective, the US gets about 10% of hardwood plywood from Russia. Even if you haven't been participating in the crazy housing market across North America, you've probably heard about how expensive lumber has become, and this has driven up the price of new construction. In fact, lumber prices have nearly tripled in the end of 2022, according to the National Association for Home Builders. Russia exports enough lumber that a ban should have an impact on the global market. And of course, you may be able to profit from soaring wood prices by investing in lumber stocks. Consider these stocks and ETFs as lumber prices continue to climb. First up, UFP Industries. UFP is a supplier of lumber to the manufactured housing industry, and its stock has been up 20% over the past year. Even when lumber prices eventually fall, UFP Industries has been a strong long-term performer, rising 159% over the last 5 years. Next up, West Fraser Timber. Shares of this Canadian forestry company are up 40% over the past year. The company is one of the largest lumber manufacturers in North America and should be in a good position to benefit from Russia's timber export ban. The stock is up 122% over the last 5 years. And finally, iShares Global Timber and Forestry ETF. Consider this if you're looking for broad exposure to the timber sector. It's had a nearly 5% gain over the past year and is up 57% over the past 5 years. Fossil fuels are proving hard to quit, and oil stocks have been leading the sector, not to mention the market, for the past year. However, the surge in oil prices brought on by the Russian invasion makes the case for alternative energy sources even more compelling. Alternative energy companies have also benefited from the rise in oil prices. The global transition to renewable energy will take time, but you can take advantage of this short-term volatility by investing in renewable energy sources. Moreover, the current events taking place continue to spotlight global energy markets. Which stocks in particular have been outperforming? Well, American-Israeli solar power company SolarEdge is up over 21% since the onset of this war. Energy tech company Enphase Energy is up 11% over the past month, while Danish wind turbine manufacturer Vestas Wind Systems is up 13%. And finally, palladium, nickel, and aluminum prices have all been rising steadily recently as the war in Ukraine intensifies. Russia is the world's largest supplier of palladium with a 40% market share. The country also accounts for 10% of nickel supply and 6% of aluminum supply. Following Russia's invasion, palladium prices jumped 26% to 10-month highs, while nickel prices skyrocketed 85% to over $48,000 a ton. Metals markets have already been reacting to Russia's invasion of Ukraine. However, continued geopolitical tension as well as sanctions on trade with Russian metal producers could further squeeze aluminum, copper, and nickel markets. A few companies that you may want to consider buying shares in amidst increasing volatility include Freeport-McMoRan, Alcoa, and Sibanye-Stillwater. Freeport-McMoRan is a mining company with prime interests in copper. Alcoa is the largest U.S. aluminum producer, while Sibanye-Stillwater is a precious metals mining company with a diverse portfolio of platinum group metals, including palladium. So there you have it. Those are 5 alternatives to oil that you may want to mull over given the recent market volatility. Thank you again for watching, and be sure to like this video, subscribe to our channel, and hit the bell button below so that you continue to be notified every time we make a new video. Are there any tips I missed? Any industries that you have an eye on right now? Let me know in the comments below. Thank you again for watching, and I'll see you next time.